It's no secret that housing values around the country are dropping, but why are some areas performing better than others? There's a narrative out there in the real estate community that inventory is what ultimately drives pricing behavior. They argue that low inventory is going to set a floor on housing prices, and areas with high inventory is going to lead to price declines. So in this video, we're going to dive into this topic with real data to try and see if that argument has any merit. Now, before I begin, please hit that subscribe button. It really helps me out. I'm building out my YouTube channel to talk about all things housing and investing. As we jump into this inventory issue, know that I'm going to give you real data that dives directly into this conversation of does inventory play an immediate role in housing values? Now let's look at the data so we can start laying the groundwork for the real conversation of, is your local market going to drop in value like some I'm going to show you, or is yours going to be really stable? And be sure to stick around to the very end because I'm going to talk about things that go above and beyond inventory. This is just one data set that starts telling a basic story. We know supply and demand drives most everything. If we have a glut of supply, typically price comes down if the demand is there. And we certainly know this through COVID, right? Everything became more expensive because supply chain was just wrecked. We couldn't get the supply, but yet you had insane demand. Think used car prices just going parabolic, new autos, food, clothing, travel, hotels, everything that you wanted to do just became more expensive because the supply side of the equation was damaged, mixed with big demand. Now the question is housing any different? I think what we're going to find is no, not really. The topic we're going to go into today is inventory. That is the supply side. We still need to address the demand, and be sure to stick around for the end of the video as I'm going to dive into more topics that you should consider about your local market. Now, there's a chart from Lambert of Fortune Magazine that wound up showing the areas around the country that have seen a 5% price decline from the peak. And we're actually going to dive into some of those markets because that is the story after all, that inventory is the root cause of price declines. So of course, the opposite of that would be low inventory should see stable pricing. So we're going to compare those markets to the DC Baltimore Metro Area, which has been somewhat stable. And we're going to compare all those markets against each other to see, is there a story to tell? Is inventory really that important? Now in this video, we're just analyzing single family homes. So be sure to subscribe to our channel as I'm going to roll out a condo version of this as well, because inventory in those different asset classes can certainly change quite a bit. All right, the first area we're going to look at is Las Vegas, Nevada. So that is showing about a 7% reduction in price since the peak, according to Fortune Magazine. I like tracking inventory to go a little further in the past. If you just look at inventory year over year, or even from 2020 till today, it can be very skewed because the year of COVID, you have to kind of unwind and think we had 3 to 6 months of just lockdown phase where everyone's trying to figure out what they're going to do, where they're going to move, are they going to keep their job or not, are they going out and enjoying life or just squatting in their house. And then you had a period of just mass migration. Think work from home, think some states opening, some states saying closed, those with kids made some changes and moves. It was just inconsistent with prior trends. So as we go over these charts, know that I'm going to stretch it all the way back to go and give us a 6-year view of everything so we can sort of pick up on those seasonal trends and compare it to more normal markets. Now, we also have to think about where we are in the economic cycle of time. So before we look at these charts, know that 2017 was an expansion year, right? That was the year of the tax bill change and the economy started growing at a very rapid rate. But then in 2018, the Fed said, well, the economy is going a little bit too hot, so they're going to start withdrawing stimulus and raising interest rates. So of course, as interest rates went up, housing started pausing. So it was late, I think fourth quarter of 2018 that I would call of the last cycle, that was the housing bottom. And then interest rates started improving all through 2019 as the Fed realized they probably started tightening a little bit too quickly. And all of a sudden the Fed reversed a little. You'll read about a Fed pivot back then. Mortgage rates started improving through late 2019. Then, of course, we know the COVID story thereafter. One thing you will notice is that interest rates and housing, they really are tied very closely together. So as interest rates start going up, especially as the Fed wants to slow things down, you do see a noticeable difference in buying behavior. You also can look at the stock market and sort of overlay the wealth effect of how are people feeling from their 401k balances and their other investments. So late 2018, the stock market also crashed about 20%. again started reversing in 19 as the Fed pivoted and rates came back down a little bit. Now, Vegas is an interesting story. They have a wide range from peak to trough that I've noticed, but they started in 17 with 5,000 units available, dropped all the way down to about 2,500 in 2018. Again, that was that economic expansion. And then 18 to 19, rates started rising, recession fears started increasing, and you'll notice inventory ramped all the way back up to almost 6,000. And then COVID happened. But focus specifically on 2022. Look at that just real sharp move from about 1,300 all the way up to near 6,000 units of inventory. That is a 5 times move. That's pretty significant. Now, here's a different chart to look at. I did take out 2020 because that, again, I think that year really skews everything. The reason I like this chart is it shows seasonal trends. Generally, everything moves up and down or goes flat at around the same time of year. And what you'll notice, the difference between 2022 and all the others, is not only did inventory start picking up sooner in the year, but it picked up really, really sharply. Right, just flew up here in the summer months. Now, that's also during the time that interest rates were rising. Now, another market that's off almost 10% is San Francisco. Now, if you check out this chart, you'll just see, again, very somewhat seasonal trends. I took out 2020, but then boom, right in September, you notice that just rocket higher of inventory. When I say rocket higher, it's only about 200 units, but from a percentage basis, that's about 60% more inventory than that market usually gets to see. Now, we could probably overlay that a little bit with rising rates, but also a lot of tech layoffs that wound up happening over the last 2 months. So is that playing a role or not in the San Francisco market? And now over to Phoenix, they've been down about 7% year to date. If you go back to 17, you'll see that inventory again kind of went down from that 4,300 to 2,800. So a big drop during the expansion phase. And then of course, 2018 into 19, recession fears, rising rates, inventory picks back up, and then craters all the way through COVID. And notice the big trend from 2022, a big jump higher from 580 units to about 2,800. That is just a monstrous move of inventory. And here you can see the year-over-year comparison. And it was back in April that we started noticing inventory picking up and has since stabilized a little. And you see that rolling over a touch. But again, when you compare year to year to year, this is also the time of year that things start rolling over from an inventory standpoint. A lot of sellers are not going to put their houses on the market this time of year. They just might wait till the spring season where they feel they can get a little bit more money for their house. Now, the number one price decline from Fortune Magazine was Austin, Texas. So we're going to take a look at that chart and you'll see much of the same. So if you go back to 2017, you are going to see just normal cyclical behavior of seasonal adjustments where inventory goes up and down based on whatever the season is in that local market. But the run up here in 2022, very similar to the others. That looks like about 400 units all the way up to 2,600 units. So about 6 times the inventory in 1 year. Very steep up move. Notice the others are somewhat gradual, and this one just went straight up. Now we're going to get into the DC Metro Area and take a look at some of those. And I want to see if you can pick up on the trends. Now, DC is very similar to San Francisco, not a tremendous amount of land, so not a lot of available single-family homes to choose from. Now, what you'll notice here in DC is that we are still trending lower in active units than any other year that we're measuring. And we're actually about half of what existed in 2019. So, of course, these other areas we've been looking at, we have much more inventory right now than we had back in 2019, but DC is still dramatically underperforming. Now here's Montgomery County, Maryland. It's just north of Washington, DC. And what you'll notice, again, still starting off with normal seasonal patterns of up and down inventory. We're generally a spring selling season, kind of waters down through the summer, a little bit of a pickup of activity, let's call it October, November, and then we go to sleep until February, March usually. And what you'll see is that inventory today, 2022, is still lower than 2019 by probably half, right? 616 compared to about 1,500. So even less than half of the available units for sale. Now, when you compare that to year over year, it just gets more dramatic, right? So I did keep 2021 on there. This was the time of year that, again, sellers just kind of pulled back and they didn't put new listings on the market. Right now, we look to be trading a little bit sideways compared to prior years. Just look at that difference of 1,000 units of available choice the difference between today and the last normal market of 2019. Last one we'll look at is Anne Arundel County. So now you're due east of Washington, D.C., about 30-minute commute. And same story, 620 units available today compared to 2019, probably about 1,800 units. So that's about 60% less inventory today than existed during that time. Just absolutely amazing. And now the year-over-year chart that you're looking at here, again, just shows the massive disconnect of available homes that you can purchase. Now, to further tell the story and give you a better comparison, I'm actually going to take the Phoenix and Austin market, and I'm going to overlay that on the same chart with Washington, D.C., Montgomery County, and Anne Arundel, so you can really see the stark difference. Now, even if you forget about all of the prior years, you can't help but notice the difference in 2022. You have a few areas that just went parabolic for their listings and a couple others that are remaining very, very stable, almost in line with 2021, and in some cases lower. Okay, to recap, if all I did was look at those charts, it's pretty safe to say that we can make an argument that a rise in inventory will have a dramatic impact on the pricing in your local market. That the story that inventory matters, that the real estate agents and the community is pitching, that it might actually have a lot of merit. Now, inventory just talks about the supply side. The demand story is where things get pretty interesting. In the coming weeks, I'm going to talk about different points that impact the demand side of the equation, so make sure you hit subscribe so you get notified when those come out. But here are just a few things that come to mind. Number one is population growth. Are people moving into or out of your area? You have the local job market. Are employers hiring people? Are they laying people off? What kind of jobs are in your market? Are they high-paying jobs, low-paying jobs? But then this leads to the other, which is the work-from-home environment. So we have a lot of places where job layoffs are picking up, but the local residents just don't know because those layoffs are happening to people that moved in over the last couple years, and they've had the luxury of working from home. Is your area one that has thrived on a bunch of work-from-home residents moving in? Again, that extra demand starts driving prices higher. Investors. Now, this is a big one because the investment side leads to iBuyers like Zillow and Opendoor and Redfin, but it's also regular people trying to build their own investment portfolio while competing with the likes of BlackRock, these big, huge investment trusts that were going around gobbling up real estate. One could argue all those extra investors in the market were competing with owner-occupants and yet again, driving up prices. One could also argue that if there's stress in that market, that those investors will bail very quickly, and then you might see that run up of inventory and therefore possible price reductions. These are just a few topics I'll be discussing throughout December. You know, my goal is to just empower home buyers and sellers to better understand their local market. What I believe is that some markets I have everyone just frozen in thought, and they don't know how to analyze or even start to figure out, should they sell their house? Should they buy now? Should they wait for prices to go lower? Will prices go lower? All those things. And when you meet a real estate agent, many of them will just say, now's a great time, you should do it. There's always disclaimers, now's the right time, you should do it at the right price and right incentives, using some of these things that we've talked about today to help you determine what your pricing strategy should be. If you enjoyed this video, please hit the like button. It really helps me out. Be sure to subscribe to the channel. And I'm John Downs. I'm a loan officer in the Washington, DC Metro Area. If you have any questions about any of the information we shared today, please reach out.